Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Thursday, October 26th, 5:17 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. Appreciate everybody clicking the like button. 30% of, that's a high, 30% of viewers clicked the like button on last night's video. And that's all we ask in return for putting out this content is that you click the like button and pass our work on to as many people as you think would benefit from it. We truly appreciate it. Moving on, state of the market. We're in a moderate correction, over 10% off of the July highs now, late July highs. Check the trend gauge over here. Market leaders continue to just look frankly awful. We went to last Friday, went to bearish slash downtrend on that short term. Same thing. All five of the major indexes trending below their short term 21-day exponential moving average. Same thing relative to the medium term 50-day moving average. Mixed bag against the 200-day moving average, but the NASDAQ 100, the lone holdout above there, the NASDAQ composite below the 200-day moving average. So that arrow moving closer to red. So what happened today? Last night, initially after hours, Meta was up on earnings. Then there during the conference call, some not so not so good news was presented. They ended up down 3.7% on the day. After hours today, Amazon reported initially up 3%, now flat after hours, just not seeing a good reaction from these earnings reports. Netflix remains the lone supportive, positive. Uh, that's not even in the Big 7, but it's in the Big 10. The Big 10 being the 10 stocks that are in the FANG Plus index. Even Microsoft now below the lows of the gap up day on its earnings report, down 3.75% on the day. So big caps just can't get a bid. Very high trade for RSP, the equal weight S&P 500, and that would signify that people are exiting the S&P and which is market cap weighted, going into the RSP, which is equal weighted. This happened in Q4 of last year, but right about the time everybody floods into the RSP, like in this past January, the Big 7 made a big comeback, and RSP had big underperformance relative to the big cap S&P 500. So Big 7 led the large caps lower. Small and mid caps did finish green on the day, led by banks, which had a big day. KRE up 3%, KBE up 2.6%. Here are the final numbers. Big 7 down on average 2.94%. All 7 were lower on the day. Our 8 growth ETF composite, the RG8, down 0.63. S&P 500 gap down 0.3. Couldn't get anything going. Ended up down 1.18%. NASDAQ 100 gap down 0.7, ended up down 1.9%. Dow down 0.76%. Mid caps and small caps positive, as I mentioned, up by 0.5% and 0.34% respectively. Global 60/40 down 0.42. Bonds boosted this performance today as yields pulled back again, boosting bond prices. In-house GROTECTION down 0.51%. Let's take a look at the charts in the tail of the tape. You can see the S&P 500 here very clearly making a lower low, closing at the bottom end of its range. We had on last night's tail of the tape. Well, it's actually been on there for a while. 41.55 is the 50% retracement level of the bear market from 2022, and we're back to that level right now. We're going to show these charts on the podcast tomorrow. Connor's going to present them. There's also some anchored volume weighted average price settings right around this 41.44 area. And you can see this resistance over here. There's also a volume shelf in this area. Volume shelves are formed when you trade in a tight range for an extended period of time in price. And you can see all the consolidation that took place over here between 41.50 and 4,200, same level back here. We're actually back below that level now. Certainly not a good sign for the S&P 500. Closing at the lows of the day. Let's go quickly to RSP. While this broke below the 200-day moving average, this looks like the mid caps, frankly, and that's kind of what RSP trades like, is the broad mid cap index, because the weightings are more evened out in mid caps. This is a segue between small caps and large cap stocks and 500 equal weighted stocks. They just seem to act more alike. So very clearly underperforming for quite a while. Just about 2 weeks ago, and really primarily um, these past couple of days with the big selling in the BIG-7, you can see the big relative strength with this is a change in character. Here's the relative strength moving average line. Here's the relative strength line getting back above that 21 EMA, which implies RSP, hey, it's at least losing less than its market cap weighting brother, the SPY or IVV or VU, whatever ticker you want to use. By the way, we don't ever use SPY because SPY holds on to your dividend for a full month before paying it out 4 times a year, which is ridiculous. But RSP down 0.21% on the day. Let's move on to the ugly index very quickly, going from the leadership index to the laggard index, sitting 1.4% above the 200-day moving average now, down 1.9%. Let's go to the broad NASDAQ. And this broke the 200-day moving average today. So again, the BIG-7 resting on its outperformance from earlier in the year, primarily from April to June, and also from January to February, then based and then outperformed, but clear break on the NASDAQ below the 350 level today, approaching the 200-day moving average. Let's go to the Dow. Outperformance relative to its other big cap indexes, but making new lows back below the 33,000 level. Mid caps finished positive, so holding yesterday's lows. Hey, it's something. But you can see all the moving averages pointing down toward 4 o'clock in the slope of the lines. Not good. And really haven't tested them in over a week. We will at some point, and then it'll be curious to see the reaction, first of all, against the 8 EMA, not ADMA. Here we see small caps making lower lows intraday, but closing positive below that key 170 level. We've got the 8 EMA and before the 170 level, the 21 EMA coming down into that former support. We'll see if it now turns to resistance. Should we get back up to it? How about the VIX? Market's down, VIX up, right? Right, up 2.43%. Not a higher high, despite the markets making a lower low. So we got that going for us, which is nice. But above the 8 EMA, trending higher above the 20 level. We don't want to see that. Let's flip to the dollar, UUP. Dollar coming up toward this breakout level. Strong dollar not good for stocks, up 0.23% on the day. How did that impact the precious metals? GDX down 0.9% on the day. Silver SLV down 0.43% on the day. GLD, our only holding left besides SSO, positive on the day. This seems like a fear trade flight in there, coming back up to the top of this double bottom base, and this also corresponds around the 2,000 level per ounce in gold. Bitcoin very quickly. Ahead of itself, well, it's pulling back some after multiple gaps up. Still above the second gap up from Tuesday's action. And now you see you got a double bottom base pattern showing up in MarketSmith pattern recognition. Let's flip to bonds. Bond prices up, bond yields down. There's BND, that's the broadband index. TLT, this is the 30-year up 1.53%. BNDW is the index that we use as part of our 60/40 stock and bond, up 0.49% on the day. ACWI is the ETF that we use for the worldwide uh, stock index. VT is basically the same thing also, world stock, and US stocks are about 60% of this index. Did I get off track here? Let's look at the yields. TYX 30-year yield pulling back, 10-year yield also pulling back, as you can see. So that 5 level in the 10-year, 5% acting as resistance. Let's go now to the tail of the tape. You can pause this. I'll hit the highlights. Down 6 out of the last 7 days. Before the open, Q3 GDP came in 4% expected, 4.9% is the actual. You know that's not going to help the Fed stop raising interest rates, although they're not going to raise them according to the market at next week's FOMC meeting. But so kind of a surprise there, despite everybody saying we're in a recession. Well, these aren't recession numbers from Q3. I believe the projection on Atlanta GDP now is 2% for Q4, still firmly positive. I mentioned Amazon net down about 1% after earnings now. In the morning, we've got inflation data that the Fed considers very important. That's the PCE data. As far as sentiment, we did drop 5 points on the bulls from the AAII survey, and bears up 9 percentage points to 43.2. Another survey we pay attention to, this is um, uh, asset managers and their exposure. This dropped 42 points to 24.8. That's a big drop. And you get below 20, it has often corresponded to market bottoms. Now we're really, really oversold as opposed to just being really oversold, which we started the week with. But no buyers showing up yet. We don't predict when they will. We're just going to protect capital, sell into some bounces. Uh, Intraday, when we reclaimed this 41.55, I was hopeful that that might put in a bottom, but it didn't. We broke it twice today. Once undercut, reclaimed, then broke it again. Not good there. As far as sectors go, I mentioned the banks, ITA, that's aerospace, ITB is builders, XLU and RE utilities and real estate. Defensive sectors, money definitely flowing into the value/defensive sectors. SPHB down 0.72 on the day. That's high beta. SPLV down just 0.2. On the downside, oils, XLCKY, those are the 3 tech components of the S&P sector, those all lower. So TBT broke the ADMA. 1 o'clock, we had a bond rally or a bond auction that was given a good grade. Yields dropped on that. The S&P popped for about 15 minutes on that. We took the last bit of profit on our TBT when it broke below the 8 EMA, and we trimmed some SSO with the break of that 41.55 level after failing on the bounce, dropping our beta down from 0.40 to 0.30. Bottom line on the day, BIG-7 lead big caps, lower, small, and mid caps finish green. Yields eased a bit, but it didn't seem to matter at all. Let's take a look at a couple of charts as leading stocks continue to just get hammered. VRT, this was a leader. This is why we obey our stops. Gapped up 11% on earnings. So it got up to 42, closed the day today at 35. Ouch, 16% down in a day, breaking below the lows of the base. Growth stocks just don't work in a rising interest rate environment. And when the wind is at your face, you best get out of the way. Here's SMCI. Breaking back above that 300 level is just a distant memory now, although it just happened 2 weeks ago and we bought the breakout. But now near the lows after its gap down on its prior earnings report. It reports earnings again next week. Let's see what else got hit hard. Uber down 4% today, coming into the 200-day moving average. Very often, managers that like stocks will step up to the plate at the 200-day. moving average. Duolingo is another growth leader for this sector, coming now into the 200-day moving average. And after hours, Chipotle reported. It's up 2% at 1840. It was up as high as 1900 after hours, and beaten down Intel, up 6.7% after hours, despite being written off as an irrelevant semiconductor stock. It's putting up a fight here at the 200-day moving average. Anything else jump out that we want to look at? Yeah, glad we obeyed our stop on Coinbase, as it now has broken back below the 21 and the 50-day moving average. And let's see, Netflix still holding up at that 400 level, where the 50-day moving average is and the 21 EMA is approaching. The high volume close was 401.77 on its earnings gap up day. That's going to wrap it. As always, love your feedback. I answer every comment on YouTube, so feel free to leave a message or a comment, or you can email me, don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart is at dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. We're basically in a lot of cash, 31% in T-bills, 40+% in cash, and we'll be moving some of that into T-bill ETFs tomorrow, and then just a gold GLD small position. Remember, it's not how much you make in the market, it's how much of that you can keep, as evidenced by this chart that I just love to show everybody. You need to avoid, especially if you're coming into retirement. We're only down between 10 and 10.5% off of the highs. It can get a lot worse, even though this pullback feels pretty bad because we just experienced a bear market in 2022. But protecting capital is our number one job at Revere. When we protect capital, the gains take care of themselves when the bull returns. And in this great capitalistic country, it always has returned. Will it always return? We, of course, don't make predictions, but don't bet against the US. And with that, I'm going to wrap it up. This will wrap up the video for Thursday, October 26th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.